Hello, welcome back to another one of our Elimo real estate series. In today's episode, we're going to do something different. We're not looking at a house. We're actually going to talk about how to acquire a mortgage in Rwanda. Let's say you're a buyer who has a down payment, but you don't have enough money to buy a property. We're going to talk about which banks to go to, how you know what bank to approach, what criteria do banks consider when they're trying to finance you, what's the interest rate, and what other costs are included in order for you to secure a loan from a bank. It's very important that we insist and let you know that we're in no way a financial service firm. So if you need more information, it would be best to contact the bank directly. This is based strictly on our knowledge of the real estate market and the research we've made by talking to different banks and also talking to different clients. So the first thing we're going to talk about is who can secure a loan. Both foreigners and locals can secure a loan from a bank as long as you're able to finance it 30%. So most banks will ask you to put a down payment of 30% and they'll add the other 70% to finance you. How do you know which banks to go to? Let's say you're new to the country and you're looking for a bank to finance your mortgage. The simplest way that I find to know which bank to go to is to go to the central bank's website called ErE&x. So ErE&x is a Kinyarwanda word for compare. So on that website, there's a list of different commercial banks and there's information about which loans they offer. So if you want to learn more about the home loans, you click on mortgage loans and you'll see the interest rates for different banks. And the thing that you need to know is that from that knowledge, then you can contact the bank and it's okay to go to different banks, schedule meetings and see what works for you best. That would be my advice. And if I was trying to secure a mortgage, that's something that I would personally do. So what's the interest rate? So the interest rate varies in Rwanda. From the ErE&x website, you're going to see that it varies between 16% to 18%, 19%. Also, the thing that actually on the website, once you open the website, the first thing that they tell you as well, I took a screenshot of it just to mention it, is that the National Bank of Rwanda does not enter data into the system and the values shown on the website are estimations. So these are estimations, they're just giving you an idea. If you want a mortgage and you know which bank you want to work with, it's best to approach the bank directly and they'll give you more information. They also say they may change depending on individual bank policies, risk evaluation, including your individual risk profile. For more details and clarification, please contact the bank of your choice. So this is a website strictly to give you information and give you a clue of what you're looking at in terms of, interest rate and the type of loan that different banks offer. The other thing is what are the requirements? So each bank has different requirements. If they want to finance you, there's a list of things they always ask you to provide. You can find them on each bank's website, or if you go to the bank, they'll give you a form with a list of things that they require you to have before you even have that conversation of how they can finance your mortgage, how you can acquire a loan from them. And I wrote down a small list. Some may ask for more or even not everything on this list, but I felt like the requirements on this list are at least the minimum that you should have. So they ask you to have a completed application letter. Obviously, they want you to have a letter, a formal letter, asking for the loan and how much you need. The other thing is they'll ask you for a copy of your ID or your passport. So if you go to the bank, make sure you have a copy of your ID. They will also need a copy of your employment contract. So they'll want to see how long your contract is for. If it's an open-ended contract, I think it also helps them in terms of evaluating if they want to finance you or not, because banks as well have, it's a risk that they're also taking. So it's important that they know, they see your employment contract. The other thing is to take a passport photo. I think it's best to take more than one, just in case you need to put it on different forms. The other thing is to take your salary and certificate of service, so service certificate. The other thing is to have the valuation report made by valuer accepted by the bank. So you have to get a report of the property that you want them to finance. Usually, if you go to the bank, they'll then give you a list of different property valuers that they work with, because each bank has valuers that they work with. The other thing is to have the original document of the house deed, the title deed, and the construction permit. So the thing to keep in mind is that once they finance you, then they take the original title deed and the bank keeps it, so that you can't sell the property because there's a mortgage on it. Before you sell the property, then you have to make sure you pay the bank first. So they're also protecting themselves. Another thing to note is that once you have a mortgage, it also goes into the government system, because before anyone purchases your property, there's a website that they go to, which is a government website for land. And when you have a mortgage, that information is on that website. And lastly, you need to have a provisional sales agreement with the owner. And I think I've mentioned this before, you also need to be able to have 30% at least of the total purchase price. And the bank will finance you with the other 70%. But all these are things that you negotiate with them and you talk to them about. The last question are the costs that are also included on top of, getting a loan. So the bank will ask you, if they decide to finance you, they'll ask you to pay. Obviously, there's an interest rate. I talked about it. It's 6% to 18%. But the 6%, in my experience, I know that the people that get the 6% are usually the government, the bank employees. It's more of an advantage that they get. So I really don't think you're going to get as low of a mortgage as 6% as someone outside. It's going to be, the lowest I've seen people get, honestly, is about 15%. But you can talk to the bank. Honestly, it depends on the period. So other costs included are the 30% down payment that you, as the person looking for a mortgage, will have to put down. Either you will have to prove that you have already paid it to the seller, or you'll have to put it on your account, and then the bank will give you the other 70%. Obviously, the interest rates per annum, you'll have to pay for fire insurance. You'll have to pay for the loan insurance. So you also need to insure that loan that the bank is willing to give you. The other thing is you'll have to pay for the loan application fees. So for some banks, this is a fixed fee. For other banks, it's a percentage, a small percentage, as low as 1% of the total loan that you're looking for. Also, you pay for the annual management fee, and also you pay for the processing fee. So this is the fee that you pay for the bank to process that loan. And the other thing that most people always want to know is how long is the loan paid for. So the mortgage loan, most banks offer 15 to 20 years. I'm not sure if you can get a loan for 30 years or even less. It's usually something that you can discuss with the bank about. The other thing that you have to keep in mind is the refinancing, because sometimes you take a mortgage of 100 million that you're supposed to pay in 20 years, but then you get the money in 5 years and you want to pay back. So you usually have to agree on a certain percentage of the total amount of the loan that they gave you, that once you want to repay the mortgage, because they also make money from how long you take the mortgage for. So if you want to repay the mortgage, you agree on what percentage of interest that you have to give them if you would like to pay back the mortgage in advance. The other thing that my colleague reminded me about is, if let's say you start that process of working with a bank, how long are you looking for in order to get the loan? And this is actually why we always encourage people to first talk to the bank before they start looking for a property, because sometimes when a buyer looks for a property and they negotiate with the landlord and with the seller and end up going to the bank to look for a mortgage, it might take long. So most banks take 1 month, which is 30 days, might be less, might be more, depending on your file. Honestly, it usually varies. So we always ask and encourage buyers to first secure a loan, get a pre-approval from the bank, so that once you get a property, then it's so easy to get the money from the bank. Because once you start all these processes with the bank, because this is a long process, as much as we're putting it in a short video, this is actually a long process. So it's usually best to talk to the bank, get a pre-approval, and then start looking for a property. Instead of looking for a house, find the house and then start this process. By the time you get the loan, sometimes the seller has already sold the property for someone who already has a pre-approval, or who already had the cash. So we usually encourage people to get a pre-approval. Or the other thing, the good thing about getting a pre-approval from a bank is you already know how much the bank can give you in terms of finance. Because sometimes you might love a house of 150 million, and when you go to ask for a loan, you find the bank cannot give you that much money, which then becomes a waste of your time and a waste of the seller's time. So it's usually best to talk to the banks and see, and also get to know how much they can give you. This concludes our video, and thank you so much for listening. If you have any questions, please leave them in the comment section. I'm going to put the website of the central bank, the website where you can find information about different loans that different banks are able to offer. And you can also download the app, get it on your app. It's available both on Android and iOS, and that's something for me that I found very useful. Even when I'm working with different clients, I usually encourage them to compare on that app. So I'll leave all the details in the description box, and if you have any questions, please feel free to send us an email or write to us, and we'll be happy to answer your questions. If it's something that we also don't understand, we're happy to contact banks to get that information. Thank you so much for watching this video, and I hope you like. If you like these videos as well, please let me know what topics that you need me to cover about real estate and learning more about the real estate market in Rwanda, and I will be happy to do that. Bye.